A good day to everyone. As always, welcome to our weekly market update provided by SE Securities. And as always, we'll be going through the major happenings of the market for the week, uh, all the major headlines pertaining to the stock market, as well as looking at some of the more macroeconomic factors that may have affected the market or the economy on a larger scale, as well as touching upon the secondary or bond market before we delve into the global commodity prices and see how they pertain to certain counters in Sri Lanka. And then a final roundup of the global market news before Harin will go over a technical analysis of a commodity counter, as well as the technicals pertaining to the all share and our pick of the week this week, Expo Lanka. So I'm pretty sure everyone is looking forward to that one. So without further ado, let's get into our headlines. So again, we've gone with the headline Raging Bull. So another week, another bull run. And basically the heavyweights, just like the week prior, propels the all share to an all-time high, actually. So if we go by the weekly statistics, the ASPI actually rose by 4.75% this week, whilst the S&P rose by 5.57% this week. The Colombo bourse actually did see a huge gain this week as well. It hit an all-time high, the bullish all-time high of 9,000, despite an unchanged COVID situation on the ground and an ever deteriorating economy. So if we look on Wednesday, it actually hit above the 9,000 mark and actually went all the way up to 9,335 and settled at 9,316. The early momentum during the week, prior to the early momentum witnessed earlier during the week, there was a bit of a retracement on Monday. This can actually be attributed to some profit taking that took place. The bullish momentum can actually be attributed to heavy retail and high net worth buying support. Despite year-to-date or YTD net foreign outflow being over 38 billion. So whatever the foreigners have been selling has been collected by the local investors, and that has been really the major driving force behind this bull run thus far. We saw post-Monday 3 consecutive days of gains driven by heavyweights such as Expo and LOLC. Those were the main 2 drivers, whilst other index counters such as Bill, Haley's, and RCL contributed significantly towards the continuation of this run. Whilst this market means there are hefty profits to be made, we must err on the side of caution, as there are dangers that the stock market, and there are very visible signs that the stock market is overheating, at which point there could be a significant correction. So we still do maintain that whilst, yes, this is great for the stock market, we still need to maintain some caution as well. The continuing blight or the continuing negative factor for the stock market remains the extensive levels of foreign outflow. This week, if we look at just the foreign outflows, on 2 separate days, it almost crossed the billion mark. But today, on Friday, it actually crossed the 1.6 billion mark. And net foreign outflows for the week actually came in at 3.379 billion. So that is quite damning in that sense. Turnover for the week was actually quite high. The lowest actually recorded today, which was 9 billion, but still it's a very hefty turnover. So this week as well, we see the continuing trend from the week prior that there has been high turnovers taking place in the market. Friday also, we saw the market somewhat retrace. Well, again, turnover coming at its lowest this week at 9 billion, but the fall again, like on Monday, can be attributed to profit taking place in the market. So if we move on to the more macroeconomic side of the news, murkier waters continue. So what we mean by that is that the Central Bank of Sri Lanka has re-extended the moratorium period till December 31st. And whilst this was actually supposed to expire on the 31st of August, but the extension has come about due to the challenges faced with COVID-19 and most recent lockdowns that have been enforced in the country. Now, whilst this will provide much needed relief for businesses, the strain on banks become greater as their NPLs will take a greater hit down the line. So we do still foresee that the banks will definitely take a hit with regards to their non-performing loans once the moratorium period expires. The extent of which is still unclear, which is why we still maintain that it is somewhat a gray area. In somewhat more positive news, the central bank confirmed on Wednesday that the country had received some much needed funds in the shape of an IMF special drawing rights, or SDR, amounting to 787 million US dollars, and a currency swap arrangement with the Bangladesh bank amounting to 150 million US dollars. The SDR allocation is on the back of the pandemic, with the IMF providing additional liquidity amongst its member countries. So I think they were dispersing somewhere close to 650 billion. These foreign exchange receipts will indeed help improve the country's gross official reserves, whilst also allowing the central bank to facilitate liquidity conditions in the domestic foreign exchange market. With further inflows being touted by the government, we do believe that the exchange reserves might just get the breathing space it is in dire need of. But on somewhat of a downer in terms of finishing off this segment, at the end of last week, we saw the global ratings agency S&P revise its long-term outlook to negative from stable. This was primarily on the back of their expectation that the country's financing environment may get more difficult over the next 12 months. They have further cited that the country's modest income levels, vulnerable external profile, significant fiscal deficit, government debt, and ever-rising interest payments as well. However, they do state that in their view, the ratings outlook can be improved if the government goes about boosting the external buffers. And if we look at the secondary market, the bond markets are in the doldrums. Two more failed auctions this week as the rupee depreciates further. So we saw the Sri Lankan rupee being quoted at selling rates of 222 to 223.5 against the US dollars for most telegraphic transfers and imports at most banks. Even the central bank revised its rate up to 210, but it actually settled at 207.35 on Friday. And furthermore, there was two further bond auctions that went unsold this week. So firstly, there was a 50 billion rupee auction, of which 92% of it went unsold, whilst another auction amounting to 68.5 billion rupees failed to sell 63% with a pre-declared controlled yield. The vast majority of the interest was for short tenors, particularly the 3-month bills, which is the continuing trend in pretty much all the previous auctions that have been held across maybe the last 3 or 4 months, really. And if we look at the global commodities market, the real story here is lies with oil and aluminium. Actually, aluminium is our main headline, but before that, I will touch upon briefly on oil. Oil prices continue to rise this week as optimism rebounded on global economic growth, in particular the US, as jobless benefit claims fell, whilst layoffs in August dropped to their lowest in 24 years. Now, furthermore, another driving factor is that OPEC Plus decided to phase out their production reductions by adding a further 400,000 barrels per day to the global production line. But this was somewhat offset by Hurricane Ida, which has been making way across the USA and has caused the temporary shutdown of 80% of the Gulf of Mexico's oil and gas output. But as I said, the main headline this week for the commodities segment is the cost of going green. So aluminium actually rose again this week by 59.5 US dollars at the time of this report, according to London Metal Exchange, with the metal counter hitting an all-time high of 2,727 per ton on the London Metal Exchange before a retracement and settling at this current price of 2,694.5 US dollars per ton. The metal has undergone a 50% rise over the past year alone. And the main reason behind this is that China is scaling back on production as they try to move away from highly polluting industries. And they look to achieve their own climate targets. We continue to reiterate that the aluminium price will go above 3,000 US dollars per ton by next year. So already, as it has hit an all-time high, we do expect this to have significant impact on margins on local companies such as Alumex, whose primary vertical is aluminium manufacturing, and they do import a hefty chunk as a raw material. So this may, in the medium term, actually blight Alumex's margins. And finally, in terms of the global markets, all eyes are on America as the US jobs data release is coming online today. So Asian markets came in mixed towards the end of the week, despite positive gains on Wall Street yesterday. Traders remain cautiously optimistic as they await the release of the US Labor Department's more closely watched monthly jobs report. The report will actually give some indication about the timing of the Fed's asset tapering and interest rate hikes. So this is mainly to do with that. The Shanghai Composite fell by 0.2%, whilst the Hang Seng declined by 0.4%. The Nikkei, however, climbed by 0.9%, and the Kospi in Seoul rose by 0.7% on Friday. European stocks also edged higher on Thursday, with the Pan-European Stock 600 marginally up by 0.1%. Doubts remain in Europe over monetary policy outlook, coupled with signs of slowing global growth. Eyes will be on US job data, as well as looking towards the next week when the European Central Bank meets, with some corners of the European Central Bank asking the central bank to actually wind down on its pandemic era bond purchases and move to a more hawkish stance. So those are the main highlights for the global markets. And that actually wraps up most of the news on those counters. I now hand it over to Harin, who will go over the technicals pertaining to Brent this week before he goes over the notions for the ASPI and our pick of the week this week, Expo Lanka. Over to you, Harin.
Thank you, Nuwan. So as we look at on Brent oil, the current market price is actually $73.44 per barrel. And the RSI, the area RSI comes to a level of 56.74 as the market is quite active right at the moment. So as we can see, we are somewhat around in a descending channel. So we were able to see the price moving to the daily resistance of 74.5, 75.5 and getting rejected, and certainly making lower lows and lower highs and pulling back to the daily support of 64.5, 65.5, whereas breaking the resistance of 70, 71, and now it has become officially a daily support level. So what we can expect is if the price manages to break this descending trend line, we'll be able to expect the price moving up again to the daily resistance 74.5, 75.5. If continuous rejection from this trend line occurs, and also if the price gets rejected from the 30th August high, which is 73.67, then we'll be able to expect again the daily support level 70, 71. So initial projection would be if the price manages to break this key level of 73.62, we'll be able to expect the daily resistance. Else, if the price actually gets rejected from this trend line and also the high of 73.67, we'll be able to expect it coming down to the daily support level of 70, 71 dollars. So looking at the all share index, so we were able to see the index breaking the daily resistance of 9,250, 9,300 and making it initially a support level, and index managed to close above the daily support level of 9,250, 9,300. So the RSI comes to a level of 82.54. So this is the daily RSI. So if the index manages to sustain at the daily support level, above the daily support level, we'll be able to expect it moving to the daily resistance of 9,600, 9,650. So the other way around, if the index fails to sustain above this daily support level, if it comes below the daily support level, it could eventually consolidate in between the region of 9,000 and 9,300 before actually moving up or either down. So here we have a higher high, higher low. Here we have a higher high. So the next higher, if the index comes below the daily support level, it would be a higher low formation. Else, if the index sustain above this daily support level 9,250, 9,300, above that key level, we'll be able to expect the daily resistance 9,600 and 9,650. Even while looking at the moving averages, we were able to see August 17th we had a pretty much a crossing where the 80 EMA crossed the 18, and then we have where the bullish momentum actually continued. So still the index remains to be bullish, but however it needs to sustain above that key level in order to reach the next resistance zone, which is 9,600, 9,650. So looking at our Expo, which is our top pick of the week. So at the moment, Expo daily RSI comes to a level of 87.36, and also the price seems to be getting rejected from the weekly resistance 185, 190, where it initially made a high of 192 rupees today. So even even yesterday and day before yesterday, we were able to see how the price is actually getting rejected from this weekly resistance, where I actually day before yesterday we were able to see on first we were able to see 189.5, and yesterday we were able to see 191, and today we were able to see 192. So this key area of weekly resistance is considered as a strong resistance. So therefore, if the price actually gets continuously rejected from this weekly resistance, the price could actually come down again to the daily support of 172.5, 175. So with that being said, if the price actually manages to break today's high, which is 3rd of September high, we'll be able to expect the price moving up again to the daily resistance and the psychological area of 200, 202.5. So looking at the EMA level, still there's a strong gap between the price and the EMA level. So if the price actually get rejected once again from this weekly resistance, the daily support could be expected, and also the moving average just could be tested again. So with that being said, the daily support of 172.5, 175 could be expected if the price manages to reject from this area, and also if the price continues to get rejected from this daily support and breaks, the next would be the weekly support. Else, breaking the high of 192, will be able to expect the psychological area of 200, 202.5 rupees. So thank you. Over to you, Nuwan.
Thanks, Harin. And as always, everyone can get this report sent across to our client base. We will be uploading this to YouTube, and we hope that you guys will give us a follow and like on our social media platforms. We do inundate them with all these reports and other publishers and publishings that we do. So please do give us a like. Please give us a follow and do subscribe to our content. As always, we wish you all the best for the week. Have a good weekend, and see you next week. Thank you.